strength in the early in the week gave way to a significant weakness in the grain sector this week. Saw a lot of buying early Sunday night into Monday off the concerns about the dryness in South America, Brazil specifically, the central western areas of Brazil, really the only dry area, and then too much wet in the southeast part of Brazil. And that kind of buoyed the market through Tuesday, early Wednesday. As we got in the back half of the week, we gave up a lot of ground as became more and more evident the systems that we've been seeing in the models, that we've seen that a weather pattern change here after this weekend, after getting through some real hot and dry situations where as much as 30 to 40% of the Brazilian crop area is showing or going under some, if you will, heat and drought stress. But that's going to change, or it seems like it's going to change next week as we saw those models really push moisture up into the central northern areas and actually across the whole major production areas. And that really pressured the market came well off those highs that we saw early in the week. So when we saw the December corn go back up there to the 480 level, saw January soybeans go up to well over the 1390 level, only to come back and close actually well below that, and goes back down to 1340 level. So big break off the high, but about 50 to 55 cents off the high, and that was and really it's just a weather market. When you have that, it's going to have it. On top of the wetter outlook, we also see all the conditions in southeast Brazil improve where it's been too wet. That certainly has improved. And we also should mention that we've had good moisture in Argentina. I'd say 85 to 90% of Argentina is in really pretty good condition from a moisture standpoint, which, as we know, over the last 2 or 3 years, that's been a very difficult area. They struggled with drought conditions, and even was very dry here up just 2 months ago, and they've certainly improved. Throughout this whole move up and then move down, the real weak grain side was in the wheat side. It just continued to move lower. Some might remember back when we used to talk about this just a couple months ago, how Russia was going to floor wheat exports at $270 a ton. They weren't going to sell wheat below $270. Well, what happened to that? Well, they couldn't sell any wheat, and they had a lot of competition from Europe with a bigger crop. And as of the end of the week, they were offering wheat at $230 a ton. So obviously that went right through that. And that's been the world wheat price just continues to weaken, and that is the pressure and influence. We did see strong U.S. weekly export sales in corn and soybeans. This week they were pretty well expected with 3.9 million tons of soybeans and 1.9 million tons of corn. But we did know about a lot of those in the daily announcements. So there wasn't a lot of new additional sales. And generally this has been a really good period, especially in soybeans, but it's somewhat in the catch-up mode as total commitment still stand 20% behind a year ago. But we anticipate that would still be on pace for where the U.S. export projection is. So at least we certainly caught up and got in line with the pace, but we're probably going to see some of that, some pullback in that volume here in the next, as we get into late December, early January. One of the problems in the corn that just certainly shows up when you see the weakness is the market could not hold the rally is that the last part of the U.S. corn harvest is really, especially in that central Midwest, eastern Midwest areas, is really pressuring the basis in that area. It's created some regional storage issues. The December to March corn carry pushed out over 18 cents this week, and it put 18 cents carry in it moved up from 14.5, and that is very negative. A sign that we just don't have any demand on the front end, or that the supply overwhelming the demand side of the market. It's basically in those delivery regions, the Midwest regions, that and it's very negative when you see the front end act that bad and people want out of the December and they want to get out into the March. That's certainly negative as a whole. It certainly indicates how poor the weak demand is. But it's just the weakness of the corn on the front end and the weakness of the overall world wheat market really set the tone for the lower grain market this week. Also, a lot of volatility in the soybean meal. We saw December and January soybean meal go up to new highs this week before turnaround and closing significantly lower. Matter of fact, $12 and $13 losses on Friday per tons, and that's been the backbone of the soybean rally. December corn on the week up 3 cents at 4.67. New crop December 24, 5.11 up a nickel. January soybeans up close 13.40, down 7. Once again, that's after a high of 13.98 early in the week. November 24 beans 1283 up 3. Yeah. December Kansas City wheat 618 down 22 on the week. New crop July 24th 639 down 25. December crude oil 75.89 down 128. At the recovery on Friday after dipping below $73, it was down a lot further than that, rallied back. On the cattle side, and livestock side, saw a lot of strength early in the cattle futures that had a big break then on Thursday with over 300-point losses. A lot of volatility in these cattle futures, and we're going to continue to see that. A lot of selling ahead of the cattle on feed reports, some panic selling, but the concerns about placements, numbers. As a whole, the weak beef and pork product market really pressured the markets as a whole on any rallies. We just cannot seem to get that to hold as these hogs, we're continuing to see liquidation in the hog futures, in the hog industry. Sows slaughter still too high. And what that result is, we're seeing some weakness on the front end of the market, but we're starting to see some premium added back in those more deferred futures as this liquidation is still occurring. Still anticipate that we'll see a cash index low here in the next 2 or 3 weeks. Okay, in the hog side. December cattle 175.75 up 152. February cattle 176.80 up 232. January feeders 207 higher 228.50. March feeders 230.97 up 380. December hogs 70.97 down 92, and the February hogs 75.45 down 12. This is Darrell Holaday with Country Futures in Frankfort, Kansas. We can be reached at 1-800-292-4038.